This is Bakes, Kevin Baker's Stock Market Authority, and it is Friday, October 13th. And I wanted to highlight something that I reposted the other day from Oaktree, Howard Marks, the memo. I recommend it highly. I'm going to include a link in the description when I put this up on YouTube. Further shots and thoughts on sea change. And here are the three. Read the whole thing, please. It only takes, I don't know, 10 minutes or so. But I wanted to highlight the three things that struck me, and then I'm going to share a chart with you. This memo's main message is that the changes I described in sea change, this is Mark speaking, aren't just usual cyclical fluctuations. Rather, taken together, they represent a sweeping alteration of the investment environment, calling for significant capital reallocation. Second, finally, here's what John Kenneth Galbraith called the extreme brevity of the financial memory. And boy, have I seen that in my career. Relatively few investors today are old enough to remember a time when interest rates behaved differently. Everyone who has come into the business since 1980, in other words, the vast majority of today's investors has, with relatively few exceptions, only seen interest rates that were either declining or ultra low or both. 5 years ago, and this pertains to real estate, an investor went to the bank for a loan. Let's say it's a commercial office building or a warehouse or a data center. And the banker said, we'll give you $800 million at 5%. Now the loan has to be refinanced, and the banker says we'll give you $500 million at 8%. That means the investor's cost of capital is up, his net return on the investment is down or negative, and he has a $300 million hole to fill. So there is definitely a different landscape here, and he and I are not calling for rates to do this again, but here is the long-term chart of the 10-year yield. And I know you can't believe this, you kids out there, and my audience is in their 20s. My sons are 26 and 25. And all you've seen is this over here. Rates aren't that high. Yes, this is a big ascent, but the world worked on 15% interest rates. We got down to zero in essence, and here we are at 480 or 470, wherever we closed today. I haven't checked yet. So here's some historical perspective, and rates aren't that high on the grand scheme of things, and just kind of get used to this and look for investments that work now, not what worked over the last 2 and 10 and 20 years, frankly. So there we go. I recommend them highly. Read it and fire questions at me. I'm Bakes at Stock Market Authority. Bakes at stockmarketauthority.com is my email, and I'll see you soon. Thanks now. Bye.